Take a look at this graph. The Dubai's commercial real estate market is facing a huge growing demand, while supply is barely increasing. No wonder an average office in Dubai has grown in value by 60% in just 3 years. That's why many professional investors allocate their budgets to offices in Dubai. But even in a rapidly growing market, many things can go wrong. Unfavorable deals, wrong areas, and even low liquidity units. But by the end of this guide, you'll have the answers to the 25 most important questions our clients ask about commercial properties in Dubai, so you'll be all set before committing to your first purchase. Question number 1. Is now a good time to invest in Dubai's office market? Offices as a property type in Dubai are in a quite unique position. Their supply is super limited and it's not growing much. By 2028, the supply is going to increase by just 16%. And this doesn't take into account delays. Realistically, the increase will be lower. Just for comparison, supply in the residential market is gonna grow by 50% over the same period of time. So now we're in a position where it's really hard to find a good office in Dubai. Either you wanna rent or you wanna buy. It's really hard to find a good place. And I'm speaking from experience. All fast-growing real estate companies in Dubai face the same problem. And soon I'll show you some numbers that illustrate the same thesis. But on the demand side, demand is growing super fast. Just in 2025, the number of new businesses registered in Dubai has reached 40,000 companies. And this growth is not gonna stop. The forecast is that by 2028, the total number of businesses registered in the Emirate is going to increase by 40% compared to what we have now. So the result of these trends is that a huge share of offices in Dubai is currently occupied. Take a look at the vacancy rates. They've been decreasing over the years, and now they're at historically lowest levels. For prime and grade A offices, the vacancy rates are just 2 and 3.4%. 96–98% of offices in this segment are occupied. Of course, it drives the prices up. Let's take a look at the rents first. This graph shows the average rental rates for different types of offices in Dubai. All of them have significantly increased in terms of rental returns. Same for the sales prices. This is the breakdown of the price per square foot in offices in different areas of Dubai. All of them have grown significantly, but the prime areas, like downtown for example, they've shown the most increase in value. And the prices have grown by almost 30% over the last year and a half. Yeah, now is a great time to invest in offices in Dubai. And if you're considering such an investment, get our report on Dubai's commercial real estate. My team prepared a PDF document with all the key numbers and all the key facts about the market, so you got a better understanding of what you're gonna invest in. And it also has the information on the best investment opportunities, the best projects available in the commercial space in Dubai right now. We've pre-selected them for you and made the analysis so you can see what's available now across different budget tiers. To get the report, just scan the QR code or click the link below the video. Question number 2. Do I get a residency or a golden visa? The system is pretty much the same as for residential properties, and if you're buying commercial real estate priced 2 million dirhams or more, you become eligible for a golden visa. Golden visa is basically a 10-year residency with no minimum stay requirements, so you can come and go whenever you want. You can even include your parents, and you can even sponsor a visa for domestic helpers. If you're buying an off-plan commercial unit, no need to pay the full amount to get the visa. You can just pay 20% down payment and 4% DLT fee, and this is enough to become eligible. Dubai also provides an investor visa. It's a more simple version of the residency to those who invest 750,000 dirhams in properties here. But the vast majority of commercial real estate is priced much higher than that. So for the purposes of this video, we'll skip this option. Question number 3. How much money do I need to buy an office in Dubai? Obviously, the offices are different and they're priced differently. Different segments, different classes, different areas. But let me give you a quick indication of what you could be paying for different options. The lower end is around 1.5–2 million dirhams. This is likely to be a small office 500-800 square feet, a normal area, not a prime one. So that's around 400-550,000 US dollars per one office unit. Then the next tier, 5 million dirhams or roughly 1.5 million US dollars. For this money you can get a bigger office, roughly 2,000 square feet. But let's say you want to buy a full floor, something around 5,000 square feet. For this kind of office, and let's say that's an average office, you need around 10 million dirhams or 2.7 million US dollars. And let's say you're looking to buy a full building. If it's a small one, let's say 2 to 5 stories, then the price can be around 40 million dirhams or 10 million US dollars. A larger building, let's say 10 to 12 stories, should be around 150 million dirhams or 40 million US dollars. And of course, this is just an indication to give you an idea of the price ranges. Question number 4. What are the acquisition costs besides the price? For every property you buy in Dubai, residential or commercial, you need to pay the DLD fee. It's a payment to the government, to Dubai Land Department, and it's always 4%. The second cost bucket, and you don't have it if you buy a residential property, is VAT. VAT in Dubai is 5%. Then there is a brokerage fee. If you buy a ready property on the secondary market, then your brokerage firm will likely ask for 2.1%. And the fourth bucket are additional fees. Trustee fees, for example, if you buy on the secondary market, and administrative fees if you buy an off-plan unit. They are around 5,000 dirhams or 1.5 thousand US dollars. So to make it simple, if you buy a commercial unit at the off-plan stage from the developer, then you're paying roughly 9% of additional fees. If you're buying a ready unit, then your fees are around 11%. Let's say you're buying a 10 million dirhams ready unit, your total costs will be 11,114,000 dirhams. Question number 5. What are their ongoing expenses after the purchase? It all depends on the building, and sometimes commercial properties fees can be higher than residential ones. But things you normally pay for include common areas maintenance, security, building management, AC in the common areas, and you might have insurance. So the average ongoing cost, your cost of ownership after you purchase the unit, is between 15 and 30 dirhams per square foot. That's roughly $4 to $8 that you multiply by the square footage of your unit. For grade A and prime offices, this number can be much higher. 30 dirhams, 45 dirhams, or even more per square foot. So that's 8, 12 or more dollars per square foot. Question number 6. How much money can I make? Let's start with the rental yields. And rental yields of offices are pretty good, significantly better compared to many residential units. And the difference in the rental yields we see in the commercial market segment is often driven by the area. Prime areas normally deliver higher returns compared to other areas of Dubai. And this is tightly connected to the vacancy rates I showed you at the beginning of the video. Prime and grade A offices are almost fully occupied, so the gross yields for offices in the prime areas are normally around 7 to 10%. Gross yields for simpler areas are between 6 and 8%. And if you want to calculate the net yield, your take-home profit from the rental unit, then you need to deduct the service charges we discussed a few minutes ago. The yields in this case should be around 6 to 9% for prime areas and 5 to 7% for simpler areas. Now let's take a look at the value appreciation. To give you an idea of the returns investors already got in this market, let's take a look at the average growth between 2024 and 2025. So an average growth rate of offices just in 1 year was 21.5%. And this is also much higher than some types of residential real estate. That's 4 times the average apartments growth. Question number 7. How do office leases work in Dubai? So the standard, most common lease term is 1 year. This reflects the current market reality. Many businesses renting the offices are small and medium businesses and startups. They value flexibility and they can't make long-term commitments, and they don't know if this much space will be enough next year. But there is also another segment of tenants, corporate tenants. They lease for a longer period of time, normally 3 to 5 years. They go for grade A offices, and they choose the areas like downtown or the IFC. Practically, for you as a future landlord, It means that you can decide from the beginning and plan beforehand what type of tenant you want to attract, what type of risks and benefits you want to get, and therefore plan what type of office you need. With 1-year leases and smaller companies as tenants, you'll have the opportunity to change the prices frequently and increase them with the growing market. With long leases and corporate tenants, you get more stability, but your ability to increase the rent will be limited. That's all because of the regulations we have in Dubai. If someone is not moving out and keeps prolonging the contracts, then in many cases you cannot increase the rental rates. There is a special DLD, Real Estate Regulatory Authority Index in Dubai, which shows how did the market prices change over a certain period of time. This index allows you to understand if you can raise the prices based on the prices of the similar units to the one you're renting out. And if you're eligible for the increase and you want to increase the rent for your tenant, you need to notify them 90 days before the contract expires. You cannot do it in the middle of the contract, by the way. In a longer-term contract, you might have a break clause stating the terms of the exit and the required notice period. Question number 8. Who will help me to make a good commercial investment? Forever Estates, of course. We're a real estate advisory and brokerage firm in Dubai, but we're not a usual brokerage. We're wired differently. I'm a former management consultant and banker. My head of research is a former investment banker, and we have people on the team with years of commercial real estate experience. So we treat all the clients who reach out to us as professional investors. We run all the numbers, do the data analysis, and help you make an informed investment decision. And when it comes to executing the deal, we guide you through all the stages of the process and help you at every step. So if you're looking to invest in commercial properties in Dubai, you should reach out to us for a free consultation. There is a QR code here, there is a link in the description, and also you can message us directly on WhatsApp. The phone number and the link is also below the video. Question number 9. What makes a good commercial real estate investment? What you should know about offices in Dubai is that when you choose the area, you should consider if it's a mainland or a free zone. We'll talk about free zones in a couple of minutes, but the basic idea is that there are certain zones in Dubai that are dedicated to the companies from certain sectors. A certain zone for financial companies, a certain zone for commodity trading companies, a certain zone for tech companies, etc. So the demand dynamics, unlike the residential property market, are not just driven by how convenient the area is located, or what infrastructure do you have there, or how sexy this place is. You need to take into account the growth of a certain sector of economy. So when you choose the area, you also need to choose the office class. Data says that grade A and prime offices are the most demanded types of offices in Dubai, and you need to decide what unit size you need, and do you want it to be fitted or shell and core? We'll discuss how to make this decision a bit later in this video. So when you have a unit in mind, you need to run an investment case analysis. And your most important metric is potential rental yield. First, because you want an asset that generates a lot of cash. And second, because in this segment, property valuations are often done based on the cash this unit is generating. In residential real estate, there are much more emotional buyers who are choosing the place to live, so they sometimes are overpaying for something they like. With offices, it also happens. There are certain corporations that are looking for something specific, but normally, decisions are based on numbers. And the main number, once again, is the amount of cash your property is generating. Of course, you need to base your calculations on realistic achievable rent, not on the listings available, but on the factual rent by comparable buildings. You need to take into account service charges. You need to take into account that there will be periods when your property is not rented out, so you need to deduct the vacancy losses. And also don't forget your operating costs. Question number 10. Should I buy a secondary or an off-plan commercial property? The choice between ready and off-plan depends on your capital structure, on timing, and on your income objectives. So you go for ready if you need immediate occupancy, you need to generate cash right away, you don't want to wait until the property is delivered. Also, you want to use the mortgage, because for off-plan units under construction, mortgages are not available, but you can get them for ready properties, even if you're not a resident, and your risks when you're going for a ready property are obviously lower. But what you should be ready for is a much longer transaction process. Buying commercial real estate can take a lot of time, 3, 4, 5, 6 months, sometimes longer. First, because finding the right unit is a challenge. Supply is limited. Second, because the negotiation process can also take long. And the nasty part of buying properties on the secondary market is that the seller can back off at the last moment. One of our advisors and brokers have been working on a large complex deal for a client who was looking for a big retail center. It took him many months to get everything ready, but at the last moment, the seller backed off and decided not to sell. So go for ready units, only if you're willing to spend time and effort to get the right property. If you buy an off-plan unit, the biggest downside is that you will not generate cash right away. You'll have to wait for several years until the building is handed over. But the advantage of off-plan is that the transaction goes really quickly. You have easy access to financing, developers are offering flexible payment options, and you get the opportunity to invest in a property that will be much better than everything else around when it's built. And if this is the case with the property you're considering, for example, it was like that with several on-yacht buildings that were launching in 2025, then you should go for it just for value appreciation. And this is the main case in which you should go for an off-plan property. If it's gonna be significantly better than ready alternatives, or if it's priced lower compared to the secondary market. Question number 11. What is a free zone? And how does it affect the office investments? So there are many free zones in Dubai, and they're divided by the sectors of economy. And companies of this sector can be registered there and get the tax benefits. For you as a potential landlord, this means that the demand for your property will be coming from the companies from this sector. So what you do if you want to predict the demand for offices in different free zones, you go to Dubai Economic Agenda. So the document called Dubai's Economic Agenda 2033 states that Dubai is planning to double its economy and double the foreign trade by 2033. So the capital inflows expected by the Emirate, they're sector-driven, they're not random. And this sector breakdown gives a good idea of where the new demand will be in terms of the office space. The first segment is logistics and trade. Dubai's plan is to become the top 5 global logistics hub. So the free zones that will win the most are Dubai South, Jebel Ali, and GLT. Next segment is financial services, and Dubai is gonna become top 4 global financial hub. So we expect additional demand from banks, asset management companies, and fintech companies. The main beneficiary is of course DIFC. The third big segment is tech companies and digital economy companies. So these are technology firms, media businesses, startups, and innovation-driven businesses. Key zones for them are Dubai Internet City, Dubai Media City, Dubai Silicon Oasis, and Dubai Design District. And there is an actively growing demand for mainland offices too. First, because of the real estate market. The real estate market in Dubai is booming, so developers and brokerages need a lot of space. And another trend is related to many new businesses in Dubai. They need corporate setup support, they need consulting, accounting, and legal support. E-commerce market is also booming. Now online turnover in the UAE is around $9 billion, and it's projected to double in 5 years. So for mainland offices, the demand is also gonna be high. Question number 12. Can I get a discount when buying an office? With ready properties, it's simple. You negotiate the terms with the seller. With off-plan, it all depends on the developer. Generally, more flexible payment plans mean higher prices. So if you want a lower price per square foot, transition to a stricter payment plan. Next way to get a discount is to prepay a larger share of the property price upfront, like 50% or even the full price. Then the discount can be up to 10%, depending on the developer. And of course, if you're buying in bulk, like the full floor or the full building, you're eligible for much larger discounts. But if the project is super demanded, don't waste your time on negotiating the discount. Developers understand that they can sell out the building without giving any discounts, so they will not decrease the price, and you'll just lose an opportunity to secure a better unit. Question 13. What financing options are available? If you're going for a ready office, you can get a mortgage. Terms are different for residents and non-residents. The down payment for residents is 30%, for non-residents is 40%, and rates for overseas investors are also often higher. Now it's around 8%. Residents can get around 7%. If you're buying in off-plan stage, then you can get the mortgage. You can get the flexible payment plan by the developer, but right before the handover, you can mortgage the remaining payment. Let's say the payment plan is 50-50, you pay 50% during construction with your own money, and on handover, the remaining 50%, you mortgage them. No need to put down more money, because the 50% you already paid qualifies as a down payment. Question number 14. Do I need to visit Dubai to buy an office? For off-plan, no. It's a fully remote process. Everything is digital. The only physical element that you might have is signing the sales and purchase agreement. But you will stay at your home country, and the developer will send a physical copy to you. You will sign it and send it back. If you're buying a ready property, then yeah, you will need to visit Dubai. You need to be present when the transfer is done. You or your representative, who holds the power of attorney, need to be present in Dubai during the transfer. Question 15. What's the buying process for a ready commercial property? Just 8 steps. Number 1. Select the unit. Find the unit you want to buy and show your interest. Step 2. Run due diligence. Verify the title deed, permitted usage, service charges. Check the rental contract if the unit is leased. Step 3. Agree on terms. You negotiate the terms with the seller. Step 4. Sign the MOU, which stands for Memorandum of Understanding, and make a deposit. The deposit is normally around 10%. Step 5. The developer issues the NOC, no objection certificate. It's a document that shows that the developer is okay with the sale. Step 6. Arrange the mortgage. It's number 6 on our list, but to get it done on time, you'd better start earlier. Number 7. Complete the trustee transfer. You go to the trustee office. This is the moment where you need to be in person, you or your representative. There the transfer is done and the fees are paid. And finally, step 8, you receive the keys and you receive the title deed. Question number 16. What's the buying process for an off-plan commercial property? It's pretty much the same as for residential. Step 1. Select the unit you want to buy. Step 2. Submit an expression of interest. Expression of interest, or EOI, is a sum you pay to the developer to secure your place in the queue. Its size is normally between 50 and 300,000 dirhams. That's 15 to 80,000 US dollars. Step number 3. You pay the booking amount. The specific amount depends on the developer and the project. Normally, it's 10 or 20%. Next, register in DLD, pay the DLD fee, that's 4%, and also pay the down payment if it wasn't paid before. The normal size of a down payment in Dubai is 20%. But if you pay 20% during the booking process, then it's already paid. No need to repeat it. Step number 5. Sign the SPA. SPA is a sales and purchase agreement. It contains all the terms and normally takes developers 30 to 60 days to get it done after you made the booking payment. Number 6. You follow the payment schedule. Step 7. Handover. You do the inspection, we call it snagging, when you check that everything is delivered as it was supposed to be. If something is done wrong, you submit your comments to the developer and they fix it. And step 8. Receive the title deed. Question 17. How do I make payments? It's same as for residential. You can pay in any way you want. So if you're in the UAE, you can submit the check, tap your card on the terminal, or pay in cash. With some developers, cash options are limited because of the anti-money laundering procedures. If you're paying from outside the country, then you can make the bank transfer via SWIFT, or you can pay through online checkout with your credit or debit card. Quick tip: if you're paying with an American or Canadian card, ask developer to send a special American link. In most of the cases, by default, they will not accept your payment, especially if it's an American Express. And of course, you can pay with crypto. Now many developers accept it. Question 18. What happens if I fail to pay? There is a structured process. It's regulated by the Dubai Land Department. So first, the developer will remind you about the payment. In most cases, if you pay right away, it can be settled at this stage. No fees, no penalties, nothing. But if the situation becomes worse and you're not paying, then they will make an official DLD notice. And if this doesn't help, then your property will be auctioned. If the status of the construction is less than 60% complete, then developer retains 25% of the property price. If it's 60 to 80% complete, then they keep 40%. And if it's 80% plus, they may auction your property. So if you think that you might face the situation, the best thing you could do is communicate it up front. In many cases, you can find a win-win solution. Question number 19. Which document proves my ownership? It depends on the stage. If it's an off-plan unit and you sign the SPA, then SPA is your document. Next, when your property is registered, you get a CUD. A CUD is a kind of certificate. It proves your ownership while the property is under construction, so it's kinda like title deed for properties that are not complete yet. And when it's completed, you get the title deed from the Dubai Land Department. Question 20. Can I resell the office during construction? Yes, but there are limitations. Different developers have different rules, but normally there is a certain percentage of the property price that you need to pay before you get the right to resell your property. Typically, it's around 30 to 40%. Also, all of the installments must be up to date. If you fail to pay according to your payment plan, then in most cases you won't be able to resell, and you need to get a non-objection certificate from a developer. So at the end of the day, it's up to them, and they can block your sale. If your plan is to purchase an office during an off-plan stage and then resell it during construction, please take into account that the market should support this strategy. This only works if the unit that you want to sell is highly demanded. And if the developer has stock after the launch, chances are high you will not resell it with a premium. Question 21. Do I need to furnish the office before renting it out? It depends on your target tenant. Let's break it down. Unfurnished units are preferred by corporate renters because they want to customize their layout. Also, they have brand colors, so in most of the cases, if the office is fully fitted, it gives no value to them. The downside of unfurnished units is that it takes longer to find a tenant. Small companies will not rent it, and if someone needs to move in immediately, your office won't be for them. If you furnish your unit, you rent it out faster, but your target renter will most likely be a startup or a small company. Question 22. How do I rent out my office and who manages it? There are two options: long-term leases and short-term rentals operated as a service space. So for long-term contracts, 1, 2, 3, 4, 5 years, the company that's renting your office must have a license in the free zone where your office is located. If it's a free zone office, of course. So the contract you sign with such tenant contains all the terms, and it gives them an opportunity to get a JARI. It's basically a tenancy certificate they need to operate in the UAE. For example, they needed to open a bank account. And after you sign the contract, you can manage the property yourself if you want, but a better solution is to hire someone to help you. It can be a broker or a property management company who will do all the operations. They will collect rent, they will handle the maintenance requests, and they make sure that there are no problems with the tenant and the property. The fee for a professional property management is normally around 5 to 10% of a yearly rent. Now let's discuss the short-term rentals. By short-term, we mean that there is no one-year contract. The length of your agreement with tenant is shorter. So to do that, you need to fit and furnish your office. You're basically converting it into a small business center. You provide the workspaces, utilities, internet, etc. And what you can also do is to hire a professional serviced office operator, like Regus or WeWork. They will handle the daily management and they will take the share of your profits. Your main renters are startups, and when you rent something out short-term, your yield potential is higher. So you have higher turnover, but you charge more. So if your office is demanded, you get a real chance of making more money on the capital invested. Question 23. What's the process to sell an office? Step 1. Hire a broker. This broker must be licensed in the UAE. And the first thing you do, you sign the contract called Form A. It basically authorizes the agent to sell your property. What you provide at this stage is the title deed, your Emirates ID, service charge clearance that justifies that you paid all your service charges, and liability letter from the bank if your office is mortgaged. Step 2. You list the office. You do it on local platforms like Property Finder or Bayut, and the goal of your broker at this stage is obviously attract as many relevant buyers as possible. Then when you find the buyer, there is a step 3. You agree on the terms and sign the Memorandum of Understanding, or MOU. It's also known as Form F, and it has the property price, payment structure, transfer date, and all the pre-agreed conditions. The buyer makes a deposit, and once the document's signed, both of you are legally committed. Then you get the NOC from the developer, no objection certificate, which shouldn't be hard to get if you paid your service charges. You also pay a small fee for the NOC, normally between 500 and 5,000 dirhams. And the step number 5 is the final transfer at the trustee office. So the buyer makes the payment, the buyer pays the DLD fee, and then it's done. Question number 24. What is the cost of selling a commercial property in Dubai? Number 1. Real estate agency commission. Normally it's 2% plus VAT, so it's around 2.1%. Number 2. Developer's NOC fee from 500 to 5,000 dirhams, so it's 150 to 1.5 thousand dollars. Number 3. 4% DLD fee, which is normally paid by the buyer, but sometimes this fee is shared. Number 4. Trustee office fee, also normally paid by the buyer, but sometimes shared. It's roughly 4,000 dirhams or 1,000 US dollars. Number 5. Mortgage settlement cost. If your property is mortgaged, then normally you pay 1% of the outstanding principal as the settlement fee. And number 6, if you have any outstanding service charges, you have to pay them too. Question number 25. How liquid is the office market compared to residential? The short answer is that commercial properties are less liquid compared to residential properties. And it's mostly because of the size of the market. The number of office transactions in the first and second quarter of 2025 combined was 1.9 thousand. Over the same period of time, in the residential market, there were more than 90,000 transactions. That's 45 times difference. There are much more buyers for residential real estate compared to commercial. That's all for today, but there is so much more to learn about Dubai real estate market. Check out the recent video we made.